Our first guest of the show, RDS Wealth President and CEO Dale Smothers. Dale, when you explained to your clients that they were demand destroyers, well, everyone else in the media was saying, no, we're going to have sky-high inflation. How did you explain that? How did your clients take that?
Sure. If you've got something over here that's being tariffed and it's got a 10 or 15, even 20% rise in cost, and you've got a competitor here that is very equivalent, consumers are going to choose the thing that has not been tariffed. Therefore, not picking up this causes less demand. You've got to have demand to keep with supply, and demand is what decides what inflation is going to do. And without demand, we expected prices to stay lower, which they have to this point, and I believe they will continue to do that at this time.
Let's talk about this rally here, because as a lot of the anxiety has eased away, the big winners have been technology. The NASDAQ 100, you can see, beginning of the year, really underperformed big time. This is the beginning of the year, but since then, subsequent months outperforming the S&P each month. Do you expect that to continue?
I do, Charles. Every company is a tech company at this point in time. You think about technology, the top 10 companies in the S&P 500 make up as much as 40% of the S&P 500. As tech goes, so goes the S&P.
And it's interesting, too. I mean, we almost have to start saying a lot of industrials, even they're the #1 group, but utilities, all that's still being driven by the AI tech story.
100%.
Yeah.
100%. The AI tech story is here to stay. I think it's the next forefront, if you will, or the frontier for investors, and we need to be involved in it if we believe in the U.S. economy.
I want to talk about some of the stocks that you like here. First, Apple.
Sure.
Not a great week for Apple. That developers conference was a dud. Everyone thought it would be a dud, and it was worse than a dud, right? Yeah. I guess compared. Are they missing out somehow? Or are they just so big that they can be late to the AI game and still find a way to be a key player?
I think they're big enough to be late to the AI game and still be a key player. You're exactly right. They're a household name. The brand itself stands for itself. And I'm going to tell you that when China is all cleared and we have EU behind us come July, maybe even into August, this Apple name is going to be the benefactor.
What about the notion that no one wants their phone anymore? Not once, but no one really needs them anymore. I mean, how many more doohickeys can you put on these things?
Yeah, it's true. And, with all the technological advancement, who knows, it could be in the palm of our hand one day. Literally.
NVIDIA.
Yeah.
NVIDIA, obviously the darling. It's sort of led the parade ever since the introduction of ChatGPT. This has been the main stock in the market. Spinning its wheels just a little bit here, but you like it long term.
I like it. 145 becomes a restraint for us, and if we can ever break through that, I think we're off to the races. Keeping with this theme of AI, if we consider AI the gold rush, NVIDIA makes the pickaxes and the shovels. Well, whoever wins the race, NVIDIA stands to gain.
Coreweave is the one now with the new retail following, right?
Sure,
I mean, they had the IPO, faltered a little bit, and then it's taken off like a rocket.
Like
right?
a rocket.
Wall Street's starting to hate it because it's doing so well. Wouldn't you wait for maybe a 5, 10, 20% pullback on this?
20+% pullback. You got to be careful with the entry levels here. We got in at $75 a share. We love that position. But at the end of the day, Coreweave, if we consider all the horses that are racing for the position in AI, let's maybe call NVIDIA the track that they race on.
Right.
Coreweave is the horse trainer, and I believe they have a place in the AI trade.
I'm going to do two things real quick. I want to ask you about this. I wasn't familiar with it, but I like this. Innovators Power Buffer, PJAN is a symbol.
Sure. This innovator position gives you the ability to participate in the optimism of the upside of the market. Still gives us a lot of downside protection. It's a packaged option strategy that gives us puts and calls around the S&P 500 as much as 15% protection and as much as 12% upside on the S&P between now and January. I love it.
All right. And I can't let you go. President Trump saw that CPI number this morning, said great number, Fed should lower 1 full point. Okay, don't be tepid about this. Go all at it.
It's the art of the deal,
much
Charles.
less.
Yeah, the art of the deal.
Your thoughts, because you were modeling 2 rate cuts, right?
Sure.
Weren't you?
Model 2 rate cuts, one in the summer, one in fall. I believe those are going to be tailwinds for the U.S. economy and for the market as a whole. To get a full point, my goodness, we want to be involved if we get a true full point. And he's right. It would help us with the debt payback. But at the end of the day, the Fed is not sure about 2 things. Their 2 dual mandate is labor and inflation, and those things aren't clear until Europe and China's behind us.
All right, Dale, good stuff.
Thank you,
Appreciate it.
Appreciate you.